Welcome back to the Deep Dive. Today, we're looking at a company that, well, it feels like a dinosaur in the age of mammals, but somehow it just keeps getting bigger.
While the mammals are starving, no less.
Exactly. We are digging into the Q2 2026 earnings for FOX Corporation.
It really is a fascinating case study. Because if you read the tech blogs or listen to the Silicon Valley narrative, legacy media is supposed to be dead.
A melting ice cube.
Right, a melting ice cube. But you look at these documents, the earnings release dropped today, Wednesday, February 4th, and the ice cube isn't melting. It's turning into some very cold, hard cash.
And that's the hook for today. We are in 2026. This is a non-election year. Now, just to clarify the timeline for you listening, because corporate fiscal years can get weird,
Yes.
FOX's fiscal Q2 actually covers the end of the calendar year 2025.
Right, which means the comparison period, the comp, is against late 2024.
Which was the absolute peak of a massive presidential election cycle.
So logic, and certainly all the Wall Street models, dictated that revenue should be down. I mean, way down.
Of course. All that political ad money just vanished. Plus, you have cord cutting happening left and right. The math just screams shrink.
But the math was wrong. FOX posted a revenue beat. They made more money than they did during that election frenzy. So our mission today is to figure out how.
What are we working with?
We've got the Q2 earnings release, the full transcript of the earnings call with CEO Lachlan Murdoch and CFO Steve Tomsic, and the 10Q filing.
Okay, so let's look at the impossible ad math, their digital pivot, which is somehow actually making a profit, and the just the sheer gravity of live sports.
Let's do it.
So let's start with the headline numbers, just to ground us. Wall Street was expecting a pretty quiet quarter. What, maybe $5.06 billion in revenue?
And they delivered $5.18 billion.
Wow.
That's a beat of over $122 million. In a mature industry like linear TV, a beat like that is, it's statistically huge.
But that's not even the real story, is it? It was the bottom line that had the analysts buzzing on the call.
Oh, yeah, the earnings per share.
What were they expecting?
So the consensus estimate, what all the smart money thought FOX would earn, was 51 cents per share.
And they came in at
82 cents.
82. They crushed it by over 30 cents a share. That is a massive efficiency gap.
It really is.
But I want to go back to the revenue for a second, because this is where that anomaly really lives. We know the political money evaporated. So how on earth did their total ad revenue actually grow by 1%?
It wasn't magic, and it wasn't just luck. It was a very specific market mechanic called scatter pricing.
Okay, scatter pricing. We hear this term thrown around, but it's really crucial here. Break it down for us.
So think of TV ad inventory like seats on an airplane. There are two main ways to buy. You've got the upfronts, where big brands, your Cokes, your Fords, buy slots months in advance. It's safe, predictable.
You've got your seat.
You've got your seat. And then you have the scatter market. This is for advertisers who come in much closer to the airbait.
The last-minute flyers.
Exactly. Maybe you have a new product or some leftover budget. It's like buying that plane ticket the day before the flight.
You're going to pay a massive premium. Supply's low. Desperation is high.
Precisely. And in this quarter, the demand for live news and sports was so intense that it basically broke the scatter market.
Broke it.
Pricing for news scatter specifically was up 46%.
46%. That's not a market rate. That's almost price gouging.
Management on the call actually used the word embarrassing.
No way.
Yeah, they said the pricing was, and this is a quote, embarrassingly high. Like, they almost felt bad taking the money, but the market was paying it.
But who is paying that kind of premium in a non-election year? Is it just the same old advertisers fighting over a smaller and smaller pie?
And that's the interesting part. It's not. In the first half of this fiscal year, FOX added roughly 200 new advertisers.
200 new ones.
And that's on top of 350 new advertisers the year before that.
So we're moving beyond the stereotypical direct response ads, the buy gold crowd.
Oh, far beyond. These are mainstream brands that are waking up to a pretty hard truth. The internet is fragmented.
Everyone's in their own little bubble.
Right. You're watching TikToks, I'm watching YouTube Shorts. If you're a chief marketing officer and you need to launch a car or a movie or a phone, and you need 10 million people to know about it right now, live TV is kind of the only cannon left on the battlefield.
It's basic economics. Scarcity drives value. As the audience splinters everywhere else, that remaining mass audience becomes exponentially more valuable.
Exactly. And that scarcity is insulating them from the cord cutting that is just decimating other networks.
Yeah.
If you have the live inventory, you have the pricing power.
Okay, so speaking of cord cutting, this is usually where the story turns sour for legacy media. For years, the big knock on FOX was that they didn't really have a streaming strategy. They didn't chase Netflix. They just bought this little service called Tubi.
Which everyone, and I mean everyone, mocked at the time. The digital bargain bin.
Right, just reruns of old reality shows and, C-list movies. But looking at this report, the laughter has definitely stopped.
It certainly has. Tubi just posted its most streamed quarter of all time. Total view time is up 27% year over year.
27% is impressive growth, but let's be cynical. In streaming, growth usually means burning cash. Is Tubi actually a business, or is it just an expensive hobby?
And that is maybe the single most important takeaway from this whole digital section.
Okay.
Tubi has achieved EBITDA profitability for the second consecutive quarter.
Wow, so it's actually making money. That's unicorn status right now. Disney Plus, Peacock, Paramount Plus Bell, they were all bleeding billions trying to chase subscribers.
Because they were trying to make the next Game of Thrones. They were spending a fortune on original content.
Yeah.
FOX took a totally different path.
No expensive originals.
Nope. No $200 million Marvel shows. Just a massive curated library of licensed content, all supported by ads.
So the cost structure is just completely different.
Completely. They aren't paying to produce the stuff. They're just revenue sharing on the ads. It's a much lighter model. And it works. Tubi's revenue grew 19% just this quarter.
And who's watching? Is this just, existing cable customers watching an old movie on their iPad?
No, and this is why it's so valuable to them. 70% of Tubi users are what they call cord cutters, or cord nevers.
Cord nevers? The generation that literally does not know what a coaxial cable is.
That's them. These people are invisible to the main FOX network. They don't have a cable box. Tubi acts like a net, catching everyone who falls out of that traditional ecosystem. It's a purely incremental audience for them.
That's a really smart hedge. If they leave one system, you catch them in the other. But they also launched something new, FOX One, to keep the sports fans locked in digitally.
Right, their super app. It only launched 5 months ago.
How's that doing? Because usually these kinds of apps, the ones where you need a cable login, they tend to be kind of clunky and, frankly, ignored.
Management says it's exceeding their expectations. But the usage data they shared is what's really interesting. It's a hybrid. About 2/3 of the traffic is for sports.
Makes sense. That's their core.
But the other third is coming for news. And here's the kicker. The news viewers are way more valuable to the platform.
More valuable how?
They're just stickier. A sports fan is transactional. They pop in for a game, check a score, and they're gone. The news viewer engages with the app twice as many days per week and watches 3 times as many minutes.
So the news viewer is a loyalist. The sports fan is more a tourist.
That is the perfect way to put it. And, there was this big fear when they launched FOX so that it would cannibalize their cable partners.
The classic innovator's dilemma. Why pay Comcast if I can just get it on the app?
Management addressed this head on.
Oh.
They claim there is, quote, no noticeable cannibalization so far.
Really?
Yeah. They think it's either reaching a different audience or it's just a companion to the big screen. So for now, they're getting the best of both worlds.
All right, let's talk about the engine that drives this whole machine. We've talked ad rates, we've talked apps, but none of it matters without the content. And for FOX, content really means one thing.
Live sports. The 800-pound gorilla.
And they got a little bit lucky this quarter, didn't they?
Lucky is putting it mildly. They got the broadcaster's dream. A 7-game World Series.
I remember that. As a fan, it was incredibly stressful. As an ad executive, it must have been a dream come true.
Oh, absolutely.
Yeah.
Game 7 drew over 27 million viewers. That just unleashes a massive windfall of ad revenue. And it wasn't just baseball. They had record ad revenue for the NFL regular season and college football, too.
I saw the number for that NFC championship game, the Seahawks and the Rams.
46 million viewers.
46 million. That's like half a Super Bowl. There is just nothing else in our culture that aggregates an audience like that anymore. You can't get that on Netflix.
You can't. And FOX is really strategic about how they use that attention. They don't just bank the ad money. They use those eyeballs as a launch pad.
The old lead-in strategy.
Exactly.
Yeah.
They premiered a new show, Memory of a Killer, right after a big playoff game. It instantly debuted to 11 million viewers. You cannot buy that kind of launch. To get 11 million people to even try a new show on a streamer would cost a fortune in marketing. FOX just has to schedule it right.
But this dominance comes at a cost, a very hefty price tag. We have to look at the expense side here.
Yes. This is the lead balloon tied to their hot air balloon. Revenue is up, sure, but their adjusted EBITDA, which is basically their operating cash flow, actually fell.
From what to what?
It dropped to $692 million, down from $781 million a year ago.
So they brought in more money, but they actually kept less of it.
Because the cost of renting the NFL and MLB just keeps going up and up. Sports rights are skyrocketing.
Yeah.
And they're also investing in all that digital growth we were just talking about.
There was a number in the cash flow statement that looked pretty scary if you didn't know the context. A free cash flow deficit of $791 million.
Right. It looks like they're just burning cash.
Yeah.
But you have to look at the calendar. It's purely seasonal.
How so?
Think of it like this. FOX has to pay the massive checks to the NFL and MLB in the first half of the year. But the ad money, the paycheck, that comes in gradually over the next few months.
So it's a timing mismatch. The bills are due before the revenue comes in.
Exactly. Management was very clear this reverses in the second half of the year. It's not a solvency issue. It's just the cash cycle of the sports business. You pay the leagues first, you get paid by advertisers later.
Let's zoom out a bit to the political landscape. The brand of FOX News. In this hyper-polarized world, you'd think that puts a ceiling on their growth?
You would think. The common narrative is that FOX is an echo chamber for the right, and it alienates half the country.
Is that not the case?
Well, Lachlan Murdoch threw out a really interesting statistic on the call that challenges that. He cited Nielsen data, and it claimed that while FOX News is obviously #1 with Republicans,
No surprise there.
it also has more Democrats and independents watching than their competitors do.
Wait, say that again. More Democrats watch FOX than watch, say, CNN or MSNBC.
That is the claim. And the implication is huge. It suggests FOX has become this sort of town square. Even if you disagree with it or you're hate watching, you feel like you have to tune in to know what the other side is thinking.
And for an advertiser, that's gold. They don't care why you're watching, just that you are.
Exactly. It creates this purple audience that's much safer for big brands than people realize. And that leverage, that massive audience, gives them all the power in the bundle wars.
Right. The battle between cable companies and content creators over these skinny bundles.
FOX sees themselves as a net beneficiary of the skinny bundle trend.
How? Wouldn't they want everyone on the most expensive package?
They love the big bundles, sure, but they know you literally cannot build a sports-centric skinny bundle without FOX Sports and FOX News. They're must-have channels.
They're the anchor tenants in the mall. You can lose the Campbell store. You can't lose the department store.
Precisely. So whether the bundle is fat or skinny, FOX gets paid. And we saw traditional cable subscribers decline by 6.3% this quarter. It sounds bad, but the rate of decline is actually slowing down. It's an improvement. It's stabilizing.
So the business is stable, digital is profitable, and they have a mountain of cash. What are they doing with all of it?
They are mostly buying themselves.
Stock buybacks.
Very aggressive ones. Year to date, they've repurchased $1.8 billion of their own stock. Since 2019, they've retired nearly 35% of all their shares.
35%. That's huge. That means your slice of the profit pie just gets bigger and bigger without you doing anything.
It's an incredibly shareholder-friendly move.
Yeah.
And their balance sheet is a fortress. They have $2 billion in cash just sitting there. They have plenty of dry powder.
Looking ahead, what's the next big catalyst? The Super Bowl isn't theirs every year.
The big one on the horizon is June 2026, the FIFA World Cup.
Oh, that's right. And this one is on home turf.
Exactly. U.S., Mexico, and Canada. The time zones are perfect for U.S. advertisers. Management confirmed they expect it to be profitable and are seeing tremendous excitement in the ad market already.
That's going to be a monster.
And even before that, you've got the Daytona 500 and the Indy 500. They have this lineup of marquee events to just keep the momentum going.
So if we step back and summarize the whole strategy, it feels like FOX is playing a completely different game than Disney or Warner Bros.
They are. They opted out of the streaming wars as we knew them.
Yep.
Their strategy is what I'd call the straddle.
The straddle. Okay, break that down.
One leg is planted firmly in the old world, linear TV. They're milking that cash cow of news and sports, using the scarcity to drive up prices even as the total audience slowly shrinks.
And the other leg?
Is in the pragmatic digital pivot, Tubi and FOX One. They're not burning billions on prestige dramas. They are building profitable ad-supported digital businesses.
Using the cash from the old leg to build the new leg?
Exactly. It might not be sexy, but as that 82-cent EPS beat shows, it is undeniably working.
Before we wrap, there was one little nugget at the end of the call I wanted to touch on, something that sounded a bit like science fiction.
You're talking about the prediction markets comment.
Yes. Lachlan Murdoch was asked about this. For anyone who doesn't know, prediction markets are basically gambling on real-world events. Will this bill pass Congress? Who wins the election?
Right. And FOX has a huge stake in Flutter, which is FanDuel's parent company. They have the gambling infrastructure already built.
And Murdoch said they see prediction markets not just as a betting product, but as a potential advertising revenue stream. And that just stopped me in my tracks.
Think about what that means. You're watching FOX News. The ticker at the bottom of the screen isn't just showing stock prices.
It's showing live odds.
Live odds on the political event they were literally discussing on air. 70% chance this bill passes. And you can bet on it right there through your TV.
It just completely blurs the line between news and gaming. Well, it's lucrative, I'm sure, but it fundamentally changes the relationship with the content, doesn't it?
It turns civic engagement into a prop bet, but from a business perspective. It's genius. It gamifies the news. It keeps you glued to the screen because now you have actual money riding on the outcome of the broadcast.
How long until watching the news and betting on the news are the exact same activity?
That's a wild thought. We're already seeing it in sports, with live betting lines on screen during the game. If that moves to political coverage, that is a whole new world.
A whole new world of engagement, and maybe addiction.
It certainly is, and FOX is better positioned than anyone else to flip that switch.
Well, that's a wrap on FOX's Q2. A revenue beat, a surprise profit from digital, and a dinosaur that's proving to be surprisingly agile.
Yeah, the meteor hasn't hit him yet.
Next time you open your streaming apps, just take a look at how much live content is starting to creep back onto the homepage. You might notice a trend. Thanks for listening to The Deep Dive.
We'll catch you next time.